Hello, everyone. As we look back at the month of October, it was another positive month in the market. The Dow was up about 2.5%, the NASDAQ was up about 4.5%, and the S&P 500 was up about 2.25%. So on the top line numbers, all three indexes were once again positive for the month of October. When we peel back the curtain and look a little bit beneath the surface, a lot of the gains in the S&P 500 were concentrated at the top. If we were to look at the index not on a cap weighted basis, more on an equal weighted basis, the month would actually be negative. So you can see that while the headline number on the S&P 500 was positive for the month of October, there wasn't as much breadth in the market, or there weren't as many companies participating in that gain for the month. So what else happened in October? So first, one thing that happened was de-escalatory U.S.-China trade headlines lifted some sentiment. And so there was a meeting between President Trump, President Xi, and that meeting resulted in a 10% tariff reduction, which was positive for market sentiment. The AI-driven tech rally continued in the month of October with a number of large deals being announced with some of the major players in the AI game, so to speak. So there was a lot of AI continued momentum and strength in the month of October. The government shutdown continued this month in October, and that delayed most of the employment and inflation data that was released, with one key exception, that key exception being the CPI number. So the September CPI number was reported in the middle of or towards the end of October. That number came in slightly cooler than expected, with an increase of 0.3% on a month over month basis and a 3.0% increase over the last 12 months. This release was necessary and permitted despite the government shutdown to meet some Social Security Administration deadlines. After this inflation report was announced, the Social Security Administration released their cost of living adjustment for 2026. That cost of living adjustment, or COLA adjustment for short, was 2.8%. That'll go into effect in January of 2026. The Fed announced a 25 basis point or 0.25% quarter percent cut this month, but emphasized that a cut in December was, quote, far from a foregone conclusion. So while a Fed rate cut does give us somewhat of a tailwind, so to speak, going into the end of the year and even into next year, it's not a foregone conclusion that we'll get a rate cut in December. Depending on what the data says, we're anticipating that it could be still very likely that we get one more quarter percentage point cut before year end. We're in the middle of earnings season with about 64% of companies in the S&P 500 reporting their earnings for the quarter. Of those, 83% have beaten consensus earnings per share estimates. So still continue to be positive from an earnings perspective. Stock price generally tends to follow earnings, especially over the long term. There could be short-term dislocations in that, but over the long term, stock price will follow earnings. So as long as those earnings continue to grow and trend in the right direction, that gives stocks room to continue to grow and run from a price perspective. Stocks historically have enjoyed some seasonal benefit and seasonal strength at the end of the year in these last few months, but this year has been far from typical. So we've had 6 consecutive months of positive returns in the market. While that's been great, we are due some kind of healthy pullback or digestion of those gains at some point. Whether that happens in 2025 or into 2026, we're not going to make a definite call on that, but it would be healthy to digest some of those gains at some point, whether that is this calendar year or next. So I hope you all have a wonderful month of November. I hope you get to enjoy a lot of quality time with friends, family, loved ones, and really enjoy this Thanksgiving season. Look forward to seeing you all next month. Talk to you soon.